Good morning. Welcome. It is 6 a.m., half an hour before the market opens on Tuesday, March 5th. Before I forget, this afternoon I will not be available, so there will be no live session this afternoon. I will see you guys live again tomorrow morning. Yesterday we were talking about, we were expecting not a lot of movement today, choppy. We might get slightly directional, but not in a way that will either continue a trend or break a trend. So we'll see how things are playing out this morning. The reason we said that was because of the Fed testimonial that is coming up tomorrow. So for the most part, the market should be in a wait and see mode unless there was some interesting news that came out overnight or that comes out during today's session. So let's see how our futures are doing. We are down. We're down significantly. So these are non-random. So basically it's going to be difficult for the markets to show up day today because of how much we're down in the futures. We're down about, this is about 40 basis points on the S&P 500, 65 basis points on the NASDAQ, and 35-ish on the Dow. So all of them are non-random. It will be difficult for us to have a green day today. Well, let's close higher than the previous day. It doesn't necessarily mean that we're directionally down. That's what we were just talking about before we looked at the futures. We could get directional today, but not in a way that is meaningful on a daily basis. It might be meaningful on an intraday basis, on a day trading basis, but not necessarily on a day-to-day basis. So if we go over here and we look at the S&P 500, where we set to open, it looks like right at the psychological resistance line we drew over here. So we've been talking about the last few days how this line is a region and not just a line, especially since we don't have any price history up here. So we don't know the exact level where people will start to say, okay, this is too much. And it looks like we might be starting to discover it. We did get a couple of all-time highs right in here, but they're not significantly higher than the psychological resistance line that we drew. And we're going to open, looks like, at least as of right now, we're at 510.17. So we are moving down towards this line. It looks like a little bit down towards this EMA 8. We'll actually be very close to the EMA 8 at this open. So it'll be very interesting to see if we break down and through it, or if we pop right back up and make another all-time high. But again, we wouldn't expect it to really surpass this 510 to 515 region over here. If we look at QQQ, we're opening, it looks like undoing most of the move yesterday, and we'll be very close to the EMA 8 as well. By the time this EMA 8 line gets updated, we could be right at or just below the EMA, it looks like. So today is technically important, but tomorrow when Powell starts speaking, that's going to be a lot more important. Dow Jones already below the EMA 8, and will open just slightly below yesterday's open. So that puts us comfortably inside the EMA 8 to the EMA 20 region. So trapped in between those two moving averages, but they're pretty close together. So it shouldn't take a lot of effort to break out of that. You can see over the past 2 weeks, the Dow Jones has been just chopping sideways. So that might be the beginning of a consolidation. And we were talking about how in communications and XLK last week, we were starting to see consolidation, especially in communications. I'll look at that in just a moment. So it'll be interesting to see if we broke out of that region in XLC. We look at IWM. IWM broke above this resistance right here, but yesterday we had a down day in the pre-market. We're at 204.57. Okay, so we're coming back down. There's a reasonably good chance that we're going to come right back into this region right here. So this was a little bit of a fake out. at least so far it's looking like it's going to be a little bit of a fake out. And we're not going to get that bull run indicated by the small caps quite yet. So everything is pointing to chopping sideways. There's a little bit more reason now for us to believe that we'll pull back down towards this trend line and potentially get our correction or our pullback that we've been waiting for. Over the weekend, we felt that it was about 50-50 in the next 2 to 3 weeks, and a lot more certain up in the 80 to 90% in the next 2 to 3 months. With today's action pre-market, we're going to keep that longer term 2 to 3 months at 80 to 90%. But in the next 2 to 3 weeks, it's starting to look like maybe a little bit higher probability. So probably about 60-ish%. We were going to look at XLC. XLC still chopping sideways. Still chopping sideways. Will open a little bit lower at the EMA 20. So we could break below that EMA 20, but as long as we're in this channel, then we're not going to get too excited about that. What'll happen is if this goes on long enough, all the moving averages will move up into here, and then that'll be significant because, well, that's a break would be a lot more, we'd be a lot more certain of an imminent break because a ETF, a sector ETF shouldn't stay chopping for an extremely long period of time. But we could break well before that, before all of these moving averages that converge right here. So we just, if they all made it up here, then we'd be a lot more certain that it was going to happen imminently. Let's take a look at our bonds. Bonds staying within this region towards the upper end of it, looking like it wants to go up. It's in pre-market. We see that it's moving up to that MA 200, close to that MA 50. We were talking about, was it over the weekend or yesterday? We were talking about how even though we break above this channel, there's still those two moving averages, so we wouldn't get too excited about that. So this morning looks like we might move over there. And the reason we're not going to get too excited about that is because we have the Fed making its testimony immediately after. So just because it moves up here, it doesn't really indicate anything quite yet. Yesterday we had Bostic speaking. He was one of the chairs of one of the regional Feds, and he was talking about how he had this forecast and he doesn't expect it to change in the third quarter to have the first rate cut in the third quarter. And that's the first time we've heard language. He's like, oh, I have this forecast, but it's like you never, that's news to us because he never told us he had this forecast before. So we were talking about how it's going to be very interesting and to pay attention if the Fed starts to give an indication of whether we're going to start rate cuts during the summer or during the fall or later. And so this is the first indication we've gotten from the Fed, or at least a Fed, that of a more precise timeline. And he's saying fall. He also mentioned one rate cut, then a pause. So that's not great news for people who are expecting 6 rate cuts. That makes it extremely unlikely that if his forecast and if he has his way in the meetings, it becomes basically impossible for us to get the 6 rate cuts that have been priced into the markets. And we have to question whether or not, because the Fed keeps saying 3, and then the market kept on pricing in 6. Now it started to get a little bit more realistic. And now the Fed, if they were saying 3 before, and there's a lot of them are thinking the same way as Bostic and saying a cut and a pause, then you have to question whether it's still 3. It could be just 2 or 1 during this year. So we're going to expect these bonds, if Powell says anything during the testimony remotely similar to what Bostic said, the bonds are going to start falling downwards. We're going to have higher rates, or at least the same rates, for a longer period of time, and we're going to see bonds start selling off, and that'll put pressure on the stock markets. And then all of this that we've been waiting for in the major indices could start to unwind, and we could start testing this uptrend level, or that EMA 20, and potentially even finally breaking through it. But that's all speculation. We really have to see what's going to happen in the Fed. That does introduce an extra layer of downside risk that we want to be aware of. Yesterday, we started talking about a VIX hedge for the Fed. And in my class official portfolios, I'm looking to put on a QQQ hedge, but I don't know if we'll get in because this pre-market, if we gap down to here and we keep on moving down, then we're going to miss it. But that's okay. The point is there's higher risk in the market, and we want to keep our portfolios pointed upwards, just like a broken record the last few weeks. Keep it pointed upward, but hedge when it's appropriate. And with today's move downward, it's definitely appropriate to start considering hedges. And with the Fed speaking and with all these risks that we're seeing in markets, definitely appropriate to take a look at those hedges. Let's take a look at our VIX and see what happened. Yeah, we're popping up. We popped up to 1386. Yesterday we closed at 1348. So that's already almost a 3% move upwards just overnight. So VIX looks like the market makers are starting to get a little nervous. We have our pre-market, we have our indices opening lower. We already took a look at sectors. We're not going to get sector information pre-market. Oh, there's something else I wanted to look at. Something that was pretty important. Oh, yes. Okay. I want to see momentum. How many are making 90-day highs and 90-day lows? So we have 337 90-day highs, 20 90-day lows. So this is pretty extreme. Let's see how it was a couple days ago. Let's go 2 days back. Oops, I'll just click this way. So Thursday we had 15, Friday only 10, and then after Monday we had 20 making their 90-day lows. So very, very few making 90-day lows, and we're fluctuating by 5 per day, but that's not significant. So we'll see if we get something interesting in the 90-day highs. So on Thursday, 320, we hit at a very high extreme on Friday, 471. And then yesterday we came back down to 337. So we're probably going to see with today, it being pretty clear that our close is going to be below yesterday, that this number will continue to decrease. And as this number decreases, it's going to be more and more difficult for us to continue the 90-day highs until we get a bounce. So we're just going to expect that momentum is bleeding out. So it doesn't seem like we're going to get another all-time high anytime in the next 2 to 3 days. So we will expect us to come down, test this EMA 8 today, potentially break through it, and then test the EMA 20 as early as later this week. It could be next week, but unless we bounce off of the EMA 8, but that would mean bouncing today, which is unlikely because we have the Fed testifying tomorrow. So most likely we're going to test this EMA 20, and most likely it'll be Thursday or Friday. Well, if not early next week. And so that's what the momentum is showing us right there. So it's pretty important to see. So we just talked about VIX before this, and we had that example from yesterday, the aftermarket, the VIX, and you see that that example is up 57%. And we went in and we went with a more conservative price level at a dollar. We put it on $1.35. I mean, okay, so the more conservative price level was $1.35. So let me $1.35. Okay, save that. Okay, so now it's not going to look as juicy. down. How would it go from 57% to negative? Something's weird with this. Okay, but in any case, the VIX is up. This should be showing a profit. We'll figure it out in tomorrow morning. So just be aware that we are opening lower in the futures. We could trade higher because 70% of the time we trade towards the previous day close. It doesn't mean that we actually reach the previous day's close, which is looking very unlikely because of the distance that we've already traveled. So we could just trade upwards toward the VWAP, upwards towards this. Let's draw a few lines here. Okay, so we could trade upwards towards the previous day close. We could move up one or two, maybe even three. It'd be really strong upward movement if we actually made it 3 lines upwards. But at the very least, we could move 1 or 2 lines upwards and then chop or move back downwards. If we move down, let's see if we have any levels back here. We can move downwards, but again, I don't expect a whole lot of directionality today because of the Fed testifying tomorrow. So if we move down, just don't get too excited. Well, plus we have the EMA 20, 501.96, and 508. Okay, so we've got the EMA 8 right here, and then the EMA 20 is way down. So I don't think we'll even come close to the EMA 20 today. We'll probably challenge yesterday's EMA 8 level. Is possible, but even that would be really low. But today's EMA 8 level should be higher than yesterday's EMA 8 level. So today's EMA 8 level is probably very close to one of these lines over here. So, well, I'm expecting a limited range. Don't get too excited. If you're day trading, watch these lines carefully because we could turn around on any of them and overall just have kind of a choppy day. Again, that's just my expectation simply because we have the Fed testifying tomorrow. We could get directional. That's just not too likely because of the testimonial that's happening. Okay, so that should be a pretty good picture of what's going on right now. We have all of our expectations for the day set up. We have our expectations for this week set up. We have expectations for 2 to 3 weeks set up, and we have expectations for 2 to 3 months set up. Of course, all of that can change on a day-to-day basis, but at least we have a good roadmap of how to navigate over the next several periods of timeframes. So that'll be it for this morning. Again, I won't be available this afternoon, so there will be no live session this afternoon. So I'll see you all tomorrow morning.